Good morning. Welcome to Trade Live with IG for myself, Rich McDonald, and the big Rondon.
Happy to be back, Rich. Feels like I haven't seen you in ages. Need to get the magic back together, the dream team, you know.
Where have you been?
I was in Sweden for 1 week working from the Stockholm office, and then you were having a couple of vinos with the lads in Milan.
A couple of vinos with the lads, with the boys.
What's the saying? Distance makes the heart grow fonder.
Oh, does it?
I don't know.
You miss me.
More than words can describe, mate.
So what were you doing in Sverige then?
I was working from the Stockholm office, visiting family, and then I also had a wedding to attend on Midsummer.
Ah, on the 21st.
On the 21st.
Brilliant. And is that like a big thing in Sweden that you get the date of your wedding on the?
I don't think so. It was my first Midsummer wedding, but it was quite lovely. We also had Andreas Quick from the Flow desk working from the Stockholm office. So it was a bit of a London takeover, but now we're back. Saw some girls out in Stureplan and they were like, oh, you know Rich, right?
Of course they did. Did you wear a kilt?
Tell him I need to talk to him. Urgent.
Well, I didn't get the phone call. Did you wear the kilt to the wedding?
The kilt. Well, to represent my great nation of Scotland, you mean?
Mm-hmm.
No, it got lost in the baggage. They forgot my baggage.
And did you take your new girlfriend to the wedding?
No, she stayed here. A bit too early for that.
Right, but is it still?
Not girlfriend yet, but it's still.
Oh really? You haven't had the chat?
We haven't
got to pull her for a chat in the by the fire pit.
Yeah, I mean, why not do it here? Trade live at IG, you know.
Well, go on.
No,
the camera is yours.
That was a joke. I'm not doing it. It's going very well, but not there yet.
And how is Melissa? Is she good?
Who's Melissa?
What's her name?
I'm not gonna say her name. Not gonna say her name.
I thought I was gonna get it there.
You cheeky, you're teasing me.
Right, let's see what's coming up on today's show. What we got? We got me and Rondog with you through till 8:30 this morning. When, yes, we are ready to chart crypto with Axel Rudolph. The brand new show, which is a little bit like the technical analysis show that he does on the Monday, but it's all about cryptocurrency. Then we'll have a quick go at the All Sessions opening bell, and we got a new guest.
Bill Blaine.
Double B. It's all about the B's today. It's big. It's beautiful.
It's bulge bracket.
Nice. We got a bit of BBVA as well. We got, well, could be a downgrade of UK debt at some point, considering what happened last night. But then we have Aaron and I get our boxing gloves out for a bit of a macro minute. Aaron, of course, the slow, long-term investor that never changes the portfolios. I'm going to have a crack at him again. All-time highs.
He's like...
All-time highs. Time to...
Dave Ramsey. You know that guy?
No.
Some American financial guru who says you should never take on debt and you should only buy index funds.
Yeah, fun stuff that is.
Yeah, really gets me excited in the morning.
Now we also have an exclusive for you. Yes, I do not think the BBC have this yet. ITV definitely don't. CNBC haven't talked about it this morning. So we are going to give you the opportunity to make some money today. That's coming up in about 10 minutes time. Gonna go, oh no, Phil's gone early. Phil's broken the cardinal rule.
Not the first.
Oh, he's retracted it. Did anybody get there quick enough?
Not the first time for Phil.
Who had the chance to front run that there? So go on. Let's. Good morning to you all. Funky Gibbon, Carlo, Parquet 77. Gavin Ackers is in the house. Donny 1. Morning trader friends. Is Angeline here yet?
I think I saw her sneaking around here somewhere, filming some content.
Ida Rock, good morning to you. Neil Brewster back. Long time no see, Mr. Brewster. And Boise. So, how are we going to give you the opportunity to make money this morning, Rondog? This is a UK exclusive. 7:30 this morning. You are the first people to get this opportunity.
In addition to the ones that they already have every day on our platform, you mean?
Yeah, but this is making this. You could be making £1 billion here.
£1 billion.
£1 billion.
With a B.
Quite literally, you will be. Go on, let's go to the slide. What's he talking about?
I want to do it. I want to partake as well.
The Bank of England has given us the responsibility to break this story, people. You can help design the next series of UK banknotes. I was in the Bank of England the other day, and they on Monday night, and they gave us all these details. They held us a wonderful reception in the Mulberry Garden, and this is your opportunity to get the following ideas onto a banknote. They can be in any of the categories that you see there of those beautiful notes, which are notable historical figures. Of course, the very first historical figure, other than the King or Queen, was William Shakespeare.
Yeah.
In 1970.
How did that geezer?
So Shakespeare was, of course, one of the first ones. Now there's loads of different historical figures, but we can also go in this new series of architecture and landmarks. Could be Edinburgh Castle, could be Stonehenge,
Aberdeen
Aberdeen University, arts, culture, and sport. The theme could be depicted by images of any of those, but sport in particular is one of my favourite ideas there. Noteworthy events in history, that could also be one. Innovation. So what have we had? We get the Dyson Hoover on there, maybe. Concorde, is Concorde British, or because we shared it with the French?
You know, I think I actually saw a Concorde when I was landing on Heathrow. I think I saw it. I don't know.
What year?
It like 2 weeks ago. I swear, it looked exactly like it.
Taking off, or?
No. It was just like, so when you were flying down Heathrow and then you were like passing by the BA sort of warehouses and whatnot.
Yeah.
I swear to God, it looked like a Concorde.
Right, okay.
Bringing it back. You heard it here first.
Nature, of course, you've got a lot of beautiful nature up there in Scotland or in Wales or in the around the Cotswolds, Lake District. Not so sure Canary Wharf falls into the nature bucket. But tell us now, what do you want? We've put the link there. That link goes directly to the Bank of England. A wonderful team over there. Victoria, the chief cashier, is waiting for your surveys. Now, guess how much they create and destroy every month in banknotes. Yeah, let's do a poll. How much does the Bank of England create and destroy every month in banknotes?
Destroy it as well.
They have to destroy the fake ones, all the counterfeits.
Right. I wouldn't know anything about that.
Do you know who was responsible for the biggest counterfeit operation in history of the UK?
No. Tell me, Rich.
The Nazis. So 39 to 45, there was a huge counterfeit scheme to destabilize our economy during the war. Yeah, that one will do. So they used to get the POWs.
Triggered Rich trauma, PTSD there. Feels like he's 10 all over again.
So the prisoners of war had to sit and make banknotes. Now, do we have an example of such banknotes? Let's see a video of myself in the Bank of England.
Oh, yeah. Oi, cheeky.
That is real legal tender. That is £2,000 of £50 notes, uncut.
Uncut.
Yeah.
Straight to the homies. But they invited you to Bank of England.
Yep.
Blimey. They're just inviting anyone these days, eh?
Well, the funny thing is, I want to hear you guys' ideas on what you would like on the banknote. What's your suggestion going to be? Because I've got two. And being Scottish, it's not the one that you would imagine.
I'm thinking the best left back to ever play in the Premier League, Andy Robertson, and some Iron Brew. You with me or what?
Oh dear. Nobody has a clue who you're talking about.
Andy Robertson plays for Liverpool.
Current day?
Yes, and he's the Scotland captain. This guy's lived in England for too long.
We are talking about British history of the last 500 years, and you're coming up with some geezer who plays in the Scotland team at the moment.
Well, okay.
It's history, son. British history.
Yeah, he's the greatest left back in history.
So my idea is, of course, that unfortunate moment in 1966 that ruined all our lives, if you're not English, with, is it Bobby Charlton holding the World Cup on the shoulders of all his teammates? That has to be on a banknote.
This guy's definitely lived in England for too long. Sellout. I think okay.
It's
let's
coming
get
home, exactly.
Kenny Dalglish. Let's get Kenny Dalglish on one of the notes.
Mate, you've got the
Kenny.
opportunity. 6 things in the whole of the UK are going to go on banknotes, and you think Kenny Dalglish.
Kenny Dalglish, Iron Brew.
How long have you lived in this country now?
I'm Scottish.
Have you had to do the exam yet?
I have not, but
So this is why we do a citizenship exam, because this geezer can pull out 2 footballers as part of our history.
2 Scottish footballers, pal.
What about a bottle of whiskey? Even if you'd given me that.
I don't drink, so.
Yeah, we know otherwise. Right, so yeah, let's say fish and chips. Kate Murphy says that's an interesting one. That's certainly part of our culture.
I love a wee bit.
English breakfast. That would look interesting.
Deep fried Mars bar. Now that's Scottish.
Do you know Monkey Man might have nailed it there? Doctor Who is a bit of.
Who?
Or the Beatles.
The Beatles I'll support.
Okay. So that's one that we can
agree on that. The Beatles, yeah.
Beatles. Roger Bannister, that moment Roger Bannister crossed the line, that is a big moment in world history.
Yeah.
We got to be proud of him.
Absolutely, yeah. Rich McDonald representing United Kingdom in the Commonwealth Games. That's my favorite Scottish athlete.
I'll get you a picture of that. I'll get you a T-shirt with it printed on it.
Oh, I'll wear that.
And on our next bet, you've got to wear it around the office for a day.
There's nothing to bet. I'll do that gladly, mate.
Right, Freddie Mercury is the idea from Cucumber, an absolute British legend there with... I would have loved
Alex Ferguson, another Scottish legend, won the Champions League with Aberdeen. Don't know what he did after that, but he had a great career in the Scottish Premier League.
Yeah. Right, good. So that is our greatest opportunity to give you the chance to be part of making money today. The poll numbers are, right, how much is made and destroyed each month in the UK? Is it 1 billion sterling, 20 billion sterling, 80 billion sterling, or 300 billion sterling?
Oh.
A month, every month.
It's a big sort of, it's a big group there, from 1 to 300 billion. I'm saying 80.
You're saying 80. Well, have you got a computer there? You can go into the poll, sir.
Okay.
Right, so we do actually have some news stories this morning.
I accidentally pressed 20, but hey.
So let's go into some overnight action, because there is actually quite a lot to go through. Yeah, we've got a couple of interesting ones there. The old big beautiful bill has passed the Senate.
Yeah, it was a tight call, but eventually it got through.
The one big beautiful bill.
I was like, what's that in my ear?
I like that a lot. Gavin Acker's spot on. Jonathan Edwards' jump in Gothenburg.
In Gothenburg.
Did it in Gothenburg.
Hey, get that guy on. Get
His
that guy on.
first real breakthrough. That was
Second best hit
incredible.
in Sweden.
1994? Geez, yeah, 1994. Wow, the good old days.
I remember it like yesterday, I'm sure.
Yeah. Right. Yeah.
Beautiful tax bill.
One beautiful tax bill. That's right. So it got through, and him. I don't even want to mention his name. Casting the vote, Lance, shall we call him? So he managed to get it through. So now it goes back to the House. The House have to go through it. Are they going to let it through in its form? That's why we are trading slightly higher this morning. So,
Richard, I know you're a big fiscal hawk, which is very important and good. I share that feature with you, but I'd like to know, what's your opinion as a fiscal hawk? We obviously know this is going to add trillions to the debt, to the national debt of the US.
Yeah.
What's the short-term effect? What will our traders at home feel? Gold?
All that. Yeah.
Gold?
All that glitters is gold. Well, it has to be, right? Because we just seen the UK have one of the biggest fumbles in political history.
Yeah.
Right? Starmer, this is a massive dent in his power. And it was meant to save us 5 billion sterling, and instead it's going to cost us 200 million to put this welfare reform through. So this smashes to pieces Rachel Reeves' fiscal rules.
Yeah.
And, you know, I don't know what happens to gilts this morning. We'll find out in 13 minutes.
What if I challenge you on the gold and I say, what about the digital gold, which retail clients can now trade on IG crypto?
And how do they do that, Rondog?
Logging into IG, you can see the IG crypto banner. You'll be able to add an account and you'll be able to get started answering a quiz to show that you're aware of how it works. And once you've learned a little bit about crypto and you're ready to go, you funded your account, you can get started in trading 27 of the most active traded coins in the world.
Very interesting. Massive strides forward.
Yes.
For man.
First UK broker to offer.
That's pretty exciting, isn't it?
You heard it here first. Rich was a key player in getting it involved, actually, getting it created.
But I mean, I've got to say, with the way things are going, with the big beautiful bill, with you know, the UK government fumbling this, then it does make these non-dollar denominated assets much more interesting. Whether it's crypto, whether it's gold, whether it's whiskey. So let's have a look at the futures this morning. We've got new all-time highs on the S&P, 6,218. The US tech yesterday, wow, did we see the momentum train crash? That was brutal.
It was also a big switch from the sort of, it was on a very overly weighted on towards the Meta, Nvidia and Tesla. And Tesla in particular took a massive beating yesterday.
There we go. So,
oh, blimey.
Tesla down 5%. But where was the rotation? It was in AMD, Palantir, Broadcom, Netflix, Nvidia, Meta, all down 3% each. So as we saw the money come out of the winners, of course, this was because it was the first day of the new half, of the new quarter. And where did the money go into? It went into GM and Ford. And it went into Nike, American Airlines. It went into Intel that we covered yesterday on the show. And even stuff like McDonald's and Apple as well. So Piers actually had a great day yesterday in his Intel and his Apple.
It's very much the sort of blue chip household names, I feel like.
Exactly. Yeah, the traditional economy.
Rich, you and I are both Nike lovers and Nike stock lovers. It's now trading at $73. Do you think it's overpriced, overvalued now, or are we pricing in the turnaround a bit too prematurely? Or is this
exactly what it is? Yeah, we're going to climb stairs, and that was a big stair that was climbed on Friday. It's got a 75 top now.
75 top.
Yep.
Selling some calls, buying some puts.
Selling the strangle, 76 and 68. Spot on.
IPA.
Eh? Almost like you read my mind.
Hey,
Or watched the show yesterday.
we're in sync.
Right, talk to me on US banks. What are they doing with these dividends?
Yeah, so there has been easier Fed conditions that's come into place. Which has allowed the US banks to be less sort of conservative with their cash reserves and what sort of ratios they have on hold. And they wasted no time, really. JP Morgan increased their dividend from $1.4 a share to 1.5, 7.1% increase. Morgan Stanley increased their dividend by 8.1%.
Wow.
Citi increased by 7.1%. Wells Fargo increased by 12.5%. And Bank of America by 7.7%. And to top it all off, to get my boy Rich here all gassed up and excited, JP Morgan authorized a 50 billion share buyback program.
$50 billion worth.
Yes, sir. American dollars, not Zimbabwean. Don't be confused.
That's decent.
That is very decent. And the American companies buying back their stock has been a trend this whole year. And it's been one of the key factors, actually, that sort of pushed up the markets to get us to recover from the post-tariffs apocalypse. There's been a constant, steady stream of share buybacks from the big US companies, and it's been the sort of theme across the year, and JP Morgan has followed suit on that. This is actually one I would support.
Excellent. Glad to hear it.
Hey.
Now, who's been watching Wimbledon? Should we have a little Wimbledon teaser?
Oh, get in, pal. Don't tease me too hard, though. It's too early in the morning for that, Rich.
Here's your Wimbledon teaser.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
That's right. That is the new campaign from IG. Save our stock market, Ronnie. And fair play to Pat Cash for that. He's a great sport. I really enjoy that advert. But the topic, save our stock market, is becoming more and more important every single day. Look at the front page of the Times. Our biggest company is considering moving its listing to the US. This would be an absolute shocker. So, and the worrying thing is, the stock went up on it. They're celebrating the fact that AstraZeneca would potentially move to the US. Things have to change in this country. 88 companies left the exchange last year. And if we lose our biggest, then you've got questions around if Shell buy BP, then would they move a combined entity to the US as well? You're potentially losing hundreds of billions of market cap. And, you know, this is part of the thinking behind this Save Our Stock Market. The first call is to reduce cash ISAs. In fact, even do away with cash ISAs, Ronnie.
Yeah. I don't think cash ISA or any sort of cash savings only is a smart move. You might as well slowly light up your cash and let inflation eat them up. That's why we're all very proud at IG that we're taking the initiative of the SOS, Save Our Stock Market, where you or not you, but your new friends who haven't traded before or don't have an ISA with us can open up and get a basket of UK stocks valued up to £100 as a new client.
So how's that working?
What do you mean? Like, I don't know. I don't work in marketing, mate.
£100 of free stocks.
Yeah.
Sign me up.
Yeah,
I don't have an ISA here yet.
Hey, there you go. Maybe speak to someone in the PCM team. Someone actually knows what they're talking about, and they can help you out.
Have you seen my coverage?
Oh, mate.
He was on the show yesterday. I should have asked him about it.
You should. You should have. Get some representation.
So, yeah, that's right. IG are calling for the government to abolish stamp duty, which we would all love. Yeah, the stamp duty done away with. Cash ISAs, which it sounds like they're going to drop to 4,000, potentially releases a huge amount, over 100 billion, possibly as much as 300 billion of potential funds to be invested into the UK market.
Rich, I put you in charge of revamping the UK stock market. What do you do?
Well, you definitely make it appealing for companies to IPO. And the number one on your list should not be Shein.
Yeah.
That is not the biggest IPO of years, should not be Shein.
As much as you love shopping there.
But I think the FCA are making great strides. The potential announcement coming that you can now receive more financial education and financial help without going to a financial advisor that you have to pay for.
Yeah.
That's a big step forward. Shows like this, centered around education, are a huge step forward.
Yeah, I personally love the FCA. I think they're doing an excellent job.
Right, it is now 7:57. We're coming up to the London Stock Exchange Open. We have to give you a chance to guess the chart. It is a UK stock today. We're back in the UK. Let's go. Our good friend Hamish got it there. Hey, go on, Hamish, son.
Up the north.
Games Workshop it was. Games Workshop. What a stock. Did you see much in that, Ronnie?
Actually not. I don't get a lot of clients trading it.
It's a shame, isn't it?
I've actually never
Go
placed
and grab your bell there, son.
I've never placed a trade in it. Oh,
Is your earpiece not working today? Hey, is your earpiece not working?
It is. It's just so much yappa 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 in it, so I get.
Well done, Hamish, on that one. Right, let's see. These stocks are opening. They're opening a little bit slow today, but HSBC up, up and away. Is it time for Lloyd's to break out? 77 pence.
You think? I mean, they had a strong resistance level at 74. They broke through that, and they sort of hover around.
Beautiful.
That 74, 78 period level. So I hope for my client's sake, PCD1, which is our team, we have a client who only trade the UK banks. So we hope for his sake that Lloyd's rallies.
Well, Barclays up there as well, 335. Barclays ever improving. HSBC 883. NatWest even 506.
Well, the banks yesterday had a really, really rough day. I mean, NatWest was dipping below 500 at times. Barclays and Barclays and Lloyds as well. They had a really rough day yesterday, right. So it's a bit of a buying the dip, as one would say.
What else are we seeing? We're seeing Rolls-Royce 945.
Class.
And I'm told there was a lot of chatter going on. So Chris Beecham and I had a little bit of a debate on Monday, not over Rolls-Royce specifically. I've got absolutely no view on Rolls-Royce as a stock, but I've got a view on whether people should use their historic P&L as a guide whether to buy or sell a stock.
Interesting. And what was your take on it?
So, for example, if let's say you could own 500 Rolls-Royce shares, and have a 45,000 profit, i.e. you got in at £1, or you bought them yesterday at £9.50, right? But you've banked the profit, you've got the profit, but you own 500 shares. Which situation would you take? To have a massive P&L, or to have banked the P&L and now own the shares?
If I was trading on an IG spread bet, which is completely tax-free, I would bank the profit and then reinvest them.
Yeah.
What would you do?
But what I'm saying is it's irrelevant what your view is, but your view should not be distorted by your
P&L.
Your in price and your P&L, yeah.
Oh, of course, I agree.
And Chris Beecham doesn't.
Oh.
Chris Beecham wants to keep the P&L because it makes him feel better about the investment.
Can't pay no bills with no unrealized P&L.
Yeah. Realize that money.
Exactly.
Even if it's to reinvest.
And also realize your losses. Don't let them drag out and drag down your entire account.
Well, this is the thing. People stay in a position because they think the stock owes them something or that they'll get back to flat.
Yeah.
Rubbish.
No, bite the bullet.
Bite the bullet and make the decision on what the prospects of the stock are, not what your P&L is. Right, next, down 0.5%. Legal & General was downgraded this morning to neutral. That's why it's an underperformer. Marks & Spencer's there, 350. What's jumping out at you, Ronnie? Come on.
Not much, really. I mean, it's not much going on the sort of downside. Nothing that pops out at me. WPP, think it's one of my stocks, sort of. It's my reverse Vodafone. I'm writing that one down to zero.
You mentioned it. I didn't mention it. Where is it?
Yeah, you gotta scroll
Beautiful
down a
breakout.
long way to get to Vodafone.
There it is. What does that start with, Ronnie? What does that start with, my friend?
International Consolidated Airlines Group, SA, LLC. Marks & Spencer.
Is that 80 pence? Plus a 2 pence dividend?
Sorry,
Is that one of the best performing stocks of the year, Ronnie?
My eyesight's a bit poor this morning. Is that Smith & Nephew you're looking at?
Where is that beautiful stock? So let's just have a little look here.
Oh, wow, look at that. Exciting.
Oh.
Now that's a stock I want to own.
What happened? Yes, I didn't actually see the fat finger yesterday. That's a bit rubbish, isn't it? There it is then. So Vodafone breaking out, the big, beautiful breakout on Vodafone. Look at that. Where are we from the start of this year? We are 68 pence to 82, 14 pence over, so 20%.
Call your broker.
Vodafone up 20% this year, Ronnie.
Get your nan in. Get your nan in. Get your sister in. Get your girlfriend in. Get
They're already in,
everyone
mate. They've all got it.
I hope they
So
haven't.
sorry, up 20%. How's your S&P this year? Is it up 20%?
Anyhow, so today is an important day because IG has been given the right to Vodafone is okay. You know what, Rich?
What's not okay
I'll
is
bite the
Greg,
bullet.
because you're just chatting rubbish now.
I'll bite the bullet. Vodafone has done decent this year.
Up 20%. Yeah, decent. Thanks, mate. Yeah, annualized 40% return. Decent. Yeah. Right. Why is Greg's down 40%? That is painful. That is very painful indeed. So, sorry, that's not the one I was looking for. We are warning of profit dip as heat wave deters customers. I accidentally, annoyingly thought of this walking past the shop on the way to the office 2 days ago. Who wants a sausage roll in this heat?
I mean, personally, as a proper Brit, I never turn down a sausage roll or a steak bake for breakfast as part of my culture integration into the country. But I very much would agree with you. Piping hot steak bake is not really what you want in the heat. But what I would like is a Magnum ice cream from Unilever.
Ah. Unilever's a little bit too diversified. I have done that in the past.
Yeah, Rich doesn't like diversity. You heard it here first. Oh, man. That is karma.
Right. So we've got, Greg's really struggling there, down 12%.
For those of you who didn't see it at home, Rich's karma, he hit me with a tennis ball. It bounced back on his glass of water and poured it all over his...
Just as well we don't have any wires under here after the, So we haven't covered the European names yet. Let's have a look at the European stocks once I get the water off my computer.
Kids these days, eh?
We've got some moves in Europe here. Let's have a look at those. Ronnie, what are you seeing today in Europa?
Let me bring my chart up. Have a look.
Well, it's there on the screen if you want to have a look.
Oh. Puma down. The sky is blue, in other words. L'Oreal. Interesting. I like L'Oreal. I think it's a good, strong buy. ABB. Half Swedish, half Swiss. Strong name in robotics. If you want to get into robotics, but you don't like the volatility of Tesla, ABB is a great choice for you. What else do we have?
Let's have a look on the upside. BMW up 1.9. Strong day in the autos, as we saw read through from the US yesterday. GM up 5, Ford up 4. BMW following them up 1.9 this morning. Mercedes-Benz also up 1.3. And Renault up 1.3 as well.
Rich, what's fueling this revival of the autos on both sides of the pond?
Yeah, I don't know where that's come from. But yeah, big strong day back into traditional industrial.
Yeah, because we did see a 10% tariffs across from US to Europe. So that's gonna be affecting the autos. But they seem to be unfazed. They keep moving upwards.
Well, I think it's this rotation. It's the rotation out of AI and the momentum trade into the laggards, right? And the laggards have been the BMW. You see Gucci up there, 1.5 as well.
Are you incurring?
No, I'm really frustrated on that one because we watched it here at 170 was it?
Yeah.
And we talked about it and said, at 200 this is going to be annoying to watch, and now it's at 200.
Well, Rich, hey, it seems like we're suffering from the consequences of your own lack of actions.
I'm sure it's in your demo account, isn't it?
It's not in my demo.
What's in the demo just now?
Oh, well, as of now, not much. I've actually been focusing on maximizing client value generation and shareholder value. So I've been putting my own value generation to the side.
What planet are you on this morning? You had a late night last night or something?
One would say.
Or up too early to go to the gym this morning?
Who says I went to bed?
Oh, was it date night last night?
Perhaps.
What's your chosen? Have you taken her to Evita yet?
Evita?
Yeah.
What's that?
What's Evita? Oh my goodness. The culture. We're talking about putting cultural moments on the banknote. I don't think Ronnie's going to be the first one on there.
I am the face of culture, multiculturalism.
So Evita is a groundbreaking performance going on in the UK just now because people are paying £100, £200 for tickets to go and see the wonderful musical.
Right.
From Argentina? No?
Eva Perón.
Thank you. He's got there. So, but for the main number, Don't Cry For Me Argentina, she walks up and out of the theatre onto the balcony of the Palladium and then performs to the streets of London. Damn. And it's only a video camera following her. It's absolutely incredible.
Every Peronist dream.
So there's meant to be like 2,000 people gathering on the street outside every single night.
You said tickets are 120.
Well, no, but they're free. That's the whole point, is you can stand outside for free, Ronnie.
Yeah,
take your girlfriend.
I like that. Might take you up on that one, mate.
Go on. So you're going to take Samantha down there?
Not Samantha.
Right, okay, it is now 8:12 a.m. So if you are on your way to work for 8:30, then you could well be running late. So we're going to take a quick break. We're going to try and mop up some water before it gets into the wires of the TV cameras. And we'll see you back in 2 minutes.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Right, welcome back to Fast Markets, the part of the show where we take some of your ideas and we see if we can either steal them or offer options strikes to improve them. First thing we got to talk about is, of course, Greg's, right? Greg's down 14% on a profit warning around this warm weather. Nobody wants their sausage rolls and their big steak pies in this weather. What else, Ronnie, do you not want in warm weather? What should we be looking at this morning that might have future warnings or increased profits because of this?
Yeah. So one thing that I'm a bit conflicted about, I'm not quite sure how to feel about it, is EasyJet. Because one part of me is saying, right, summertime coming up, everyone going on cheap holidays, everyone loves an EasyJet flight. But the other part of me is saying, well, hold up. If the weather in the UK is so lovely, why should I go abroad?
Is it lovely? Maybe the UK, not London. This is horrible when it's like this. You stand in 35 degrees in Milan, sitting on a corner eating pizza in a beautiful cafe, and then you try and get on the underground here, and it's a horrible, muggy. It's not a pleasant heat to be in.
I love how you managed to turn an EasyJet stock analysis to your Milan trip.
Well, I did fly EasyJet on the way back, sir.
You did?
Yeah, of course.
Mate, they need to pay you more.
I would honestly choose to take EasyJet every time. It's so easy. Your bag, boom, under the seat, above.
No, that's
some
true.
nice food, the
That's
snacks.
true. I can't put my bag upstairs above in a British Airways flight.
Well, no, do you get to take two on? You don't get to take two on a BA flight, do you?
You can actually have luggage. Anyhow, so I'm saying I don't think EasyJet will do much this summer. I think it will sort of stay a bit where we are. I think it'll be a bit of a disappointment. I don't think we'll see that much travel as we normally see during the summer period. Rich, agree or disagree?
Disagree. I own them. I'm long them.
Okay, so where are we going? Let me get the EasyJet.
On holiday.
No, the stock. Stay in the game.
When was the last flight you were on with EasyJet? Angeline's asking.
Me?
Yeah.
I think I went to Amsterdam once.
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 How many years ago? So you're
was
you're talking about this from a really knowledgeable point of view about the EasyJet.
I'm a bit of a posh geezer. It's only British Airways for me. We've been over this, mate. But EasyJet, let's talk about the stock. Enough about me. Let's talk about EasyJet.
Go on then. Where are you seeing it?
So, I mean, we're now at what, 530-ish? I think we're touching 500 perhaps. 500 and a bounce.
Do you want to? That's very messy. Can you not get full screen on your?
Oh, is this my?
Yeah.
Oh, guys.
And just hit F11 there, please, Ronnie.
F11.
Okay, so there's the easy jet. Yeah, you can see it. It had a great rally there. What's that, from 450 up to? I mean, I can't even see what we're talking about. Never mind the people at home. So where did it peak out there, and why has it come off?
Right. So this is 8th of April. We started the bounce.
Yeah.
We started the bounce at 447. We moved all the way up to 590 in June.
I think that's about the right price.
590.
Mm-hmm.
I think we're gonna see a continued downwards trend.
I don't see why we've come off there.
I think perhaps one would argue that the sort of summer travel, this is where the pricing of it peaked. Sort of when we came in here, then everyone had the idea of summer traveling.
No, that's the problems in the Middle East. So that's, if the market's pricing in that's not an issue anymore, I don't understand why this hasn't rallied.
Yeah, I mean that's the correlation I would go with as well. Israel and Iran going to war. This will definitely affect the cheap travels to Alicante.
Are you serious?
No, of course not. How would EasyJet be affected by?
Because it's a massive route to Egypt.
EasyJet flies to Egypt?
Yes.
I didn't know they had such long haul. But it would also.
But a lot of the.
But it also affects the price of oil, fuel.
Yeah, and what's the price of oil done in the last week?
Well, now it's come down. But this was.
Okay, so as it comes down, should EasyJet go back up?
Oil was quite high at this point.
Yes, which is why the stock came off from 590 to 530. Now it should go up again. All the reasons that the stock came off from 590 to 530 are now done. They're over.
Okay, so. And
it's still there at 530. That's why I own it.
The question is, when do we come back to 590 then?
Well, that's why I own the stock. I can't give you the answer when.
Yeah. Do you see it before the summer's end?
Oh yeah. I mean, I hold this in hope or expectation that it comes up recently. There you go. There's clearly a seller there at in the low 530s, but
yes.
I certainly have a 550 target in mind in the short term. But right, let's have a look at everything else. So if you put up my screen there, we've got live Greg's price there on £17.20. What else in those names are affected by the warning this morning in Greg's? Halfords, is that positive? More people buying bikes in nice weather? Probably not. It's probably too hot for that. JD Sports now over 90 pence. That's been a huge beneficiary.
I think I have to be the first one to sort of stand corrected here. I've been a bit of a JD Sports hater, but they've done a tremendous job in bouncing back. Much of it being fueled by Nike and Adidas sort of resurgence. But yeah, they're coming up strongly. Frasers Group with it as well, carrying the sort of fashion houses.
What about the pubs? What about Weatherspoons? Should they be benefiting from Greg's demise?
Oh, they should be big winners, right?
Well, so would you expect the stock to be higher then?
I would, yeah. Cheeky Beveragino with the lads in the sun.
Let's have a look at Weatherspoons. Yeah, there we go.
Yeah, beauty.
So let's get this on a shorter term. You can see from the 23rd of June, when the heat wave started, we've seen about a 5-6% rally in Weatherspoons. So as the heat wave ends today...
Well, today it's raining, yeah.
So how's the forecast over the next couple of weeks?
We'll have to have a look. But what I'm looking to see and curious to see is when we actually see... So this is...
23 degrees.
This rise and this rally is obviously fueled by sort of market sentiment that better weather, more bevies in the garden with the chaps. However, once we actually see some actual numbers coming in and backing this statement, that's when I believe that we'll see, a real rally. When we see numbers and data backing up, that we have a strong.
So, as in the opposite of what Greg's has done this morning. When Weatherspoons come out, you think that
exactly,
they'll be able to call profits higher.
Yes.
Okay.
Thank you for translating that.
Yeah. When you get the trading statement. So would it be a good idea to therefore look when the next trading statement is in Weatherspoons, Rory?
I think, you know what? Rich, you're onto something.
Do you want to try and do that?
Yeah, I can.
Right, let's have a look at that. The tip ranks, analyst consensus in Weatherspoons, there's only a couple of them, £8.25. So, you've got a little bit of upside there. But can you, the listener out there, think of any other stocks that could benefit or get hit like Greg's has been smashed this morning? Ice cream is just it's a bit of a tricky one. Fever Tree. Does Fever Tree benefit like Weatherspoons does, or is that a bit too global now as well?
Perhaps, but in case anyone at home was scratching themselves, itching, waiting to find out when the next Weatherspoons earnings result or trading statement comes out, that would be Q4 trading statement on the 23rd of July, 2025.
So 3 weeks away.
Exactly.
Otherwise known as. So what do you do for the next 3 weeks in Weatherspoons then? Still long it?
I would.
Think there's still an opportunity there?
I think once we see the trading statement, we'll see figures that are supporting the sentiment. So I would be long.
Okay. Anything else?
What do you think?
Fever Tree also a decent.
That's what you mix with your gin and tonic, right?
That's the one.
Do they own any other brands?
I mean, they've ginger ale, stuff like that. You've got about 6 different lemonades and all that kind of thing, but
love a bit of ginger.
No other brands as such. It's all Fever Tree. But yeah, that's a decent one as well. £7.50 up to £9 in the last few months. Can you be relying on Fever Tree in this hot weather to benefit? There's certainly a lot more barbecues. You must have been to a couple of barbecues in the last few weeks.
A couple of cheeky barbies. But since we're on the topic on alcoholic beverages, Rich.
Yeah.
Diageo. Are we drinking Guinness in this heat?
Not really. It's not. I feel like Guinness is a February drink.
Yeah.
When the Six Nations is on.
Exactly. I agree. So what's your take on Diageo?
It's tricky, isn't it? It's been absolutely killed. But let's have a look at Diageo there. It's so uninspiring. It really. But do you sell puts? I don't know. It's the eternal disappointment. I can be in Vodafone and be up 20%, or I can be in this and be down 20. Yeah,
what my biggest concern about a company like Diageo is it's not only Diageo. How do you say it?
I thought you were actually taking the mic. Diageo. My biggest concern with a company like this is because it's obviously an alcohol-centric brand. That's what they do. And it's not only, for me, I'm not only looking at these guys, I'm not only looking at the short term, the summers, what's going to happen. Are you not drinking Guinness during the summers? But I think there's an overall market sentiment and shift towards sort of healthier options, especially amongst young people who aren't drinking as much anymore. And we see that reflected in the closure of pubs. I'm not very bullish on these, and I would even say I'm bearish. So would you do a pair trade long Weatherspoon, short Diageo?
I would. I like that, Rich. I like that. I would do a Weatherspoon.
It's almost like I've been doing it for 25 years, isn't it?
Yeah, it surprises me every time. I would hold the Weatherspoons long for a shorter period, like say until end of August, but I would ride that Diageo all the way to the bottom.
So you just think that Diageo is now an internal demise?
I do think so, yeah.
And so what are they going to do about it then?
Shut down. Just sell off the assets, give the shareholders the money back. No point.
Right, Bigger Biaz, what are your thoughts on the REIT British Land? Nice 6% yield. You know, that is a tough one. I've never been great on the REITs. But Bigger Biaz, I will ask my specialist for you. I had a great analyst back in the day, Steve. His name will come to me, but he was the #1 REIT analyst in the UK, and I was fortunate to work with him at Credit Suisse. So I will ask him today what he thinks of those, and come back to you. But let's have a look at the stock here.
In the words of Tony Sopranos, buy land. God isn't making any more of it, unless you're in Dubai.
Yes, the bit of landfill for you. Right, you also like Glencore, didn't you, this morning?
I did like Glencore because it's popping up, and when we were talking about it, and we were talking about it quite some time ago, and you said this is a brilliant price point for Diageo, and it's not, sorry, Glencore. I think this is sort of, as we've seen the theme.
Well, it's a breakout this morning, isn't it?
Yeah, and as we've seen the theme today has sort of been the return to the sort of defensive, the industrials, as people are reallocating their funds from the AI trade, from the high tech and the Mag 7s. I think Glencore is well positioned to benefit from the increased exposure to EVs and other sort of more defensive allocations. So,
well, the analysts certainly agree with you. They're saying 36% upside. Chris Lefemina, another great analyst of mine back in the day, now at Jefferies, he's saying 34% upside. And yeah, even Ephraim as well. Ephraim is an ex-Credit Suisse boy. Ephraim Ravi joined us on the grad scheme, I think. He is the lowest upside there, and that's still giving you 15%. So Glencore, definitely have a look at those. Oh my goodness, and Liam Fitzpatrick, my ex-analyst as well.
It's like a seniors reunion over here.
It is, exactly. It's
senior citizen reunion.
all the mining world are really, Goldman's are the only ones that are sitting on a £3 target stock currently.
But it's still a majority and an overall consensus that the stock is undervalued and it has a big upside.
Yeah, exactly. Right, good stuff. Right, it's time to talk crypto. Axel is going to be with you in about 2 minutes' time. But Ronnie, what are you doing for the rest of the day? Sleeping?
No, I'm going back to my desk to generate client value and maximize shareholder value because I love IG and I love our clients.
Oh dear. Right, the champion of culture right here.
That's me.
Did we talk about that?
We didn't. But yeah, do you want to...
Ronnie's been anointed or appointed our new champion of culture in the company.
UK, you guys are looking at the UK cultural champion. I am, in translation, I am in charge of the vibes. And yeah, rule number one, or decision number one is get rich on, more involved, more rich. Everyone loves rich. So we're gonna have more rich. We're turning the show 24/7.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hello and welcome to Charting Crypto on Wednesday morning. And let's begin by straight away having a look at Bitcoin, which we looked at from a technical perspective last week and the week before, and see whether anything's happened since then. And you can see here that basically we continue to trade sideways. And you may remember that last week I put on a parallel channel on this chart. And I'll show you again how to draw these correct, because we had a few questions on that, how to correctly draw a trend channel. So if it's pointing down, if it's a downward trending channel, you take the upper resistance line, so the highest point here, through the next higher high without any data going through it, and then you connect these up here, and then you move that one parallel down to the lowest point here. And if you have a lower one, then to this one here. So you can see that we continue to trade within this slightly downward sloping channel. Since that has followed the up move we've seen since April, which has been very strong, this is probably just a sort of a flag formation, which if we were to break out of it to the upside, meaning if we were to take out this resistance line here and also Monday's high, which on Bitcoin came in at $108,795, then that would be a valid technical break, which could then take us all the way up towards probably 118,000, 122,000, where I've got a Fibonacci extension target. But we need to see a daily chart close above that downtrend channel and above that last reaction high for this to be the case. Why is that so? Basically, it's a typical chart pattern. You take the distance between, so basically the width of that downtrend channel, and you just project it upwards from that breakout point to give you the next upside target. So that is what Bitcoin looks like at the moment. And you can see here that we're trading close to our all-time previous highs. And then you've got my Fibonacci extension targets up here, which I went through last time. I'm not going to do so again. I'm just going to very briefly mention that basically the way to get these is basically you take the, let me just show you here. You take the the low that at the beginning of a move, I think this one is February 2019, to the high of a bull market trend. That was made in November 2021. And then you take that distance here and project it upwards from the low of the counter trend move, which ended in November of 2022. And that you multiply that first distance here by 1.618 golden ratio Fibonacci number, and that gives you this 161.8 Fibonacci extension target, which we may hit if we break out of this current flag formation in the next few days. So let's basically see whether that's the case or not. You have to be very careful though with technical analysis, because what a lot of people do is they front run. They think, well, I think it's going to be a flag and therefore it's going to do this and this and that. Don't do that. The market will tell you what it does. Basically just look at the setups, and if you have a setup, then you come up with the targets, etc., and then you can react to that. So that was Bitcoin. Looking more interesting because we're now back towards the upper end of this downward trending channel. Short term, we're retracing lower, but yes, that is a distinct possibility that we could head higher again. But what is really interesting at the moment, I'm going to write a piece on that after this show today. So look out for that on the IG website and also, I believe, on the YouTube channel. And that is to look at XRP. XRP is interesting at the moment. So you can see here that basically we have broken out of our downward trending channel on the 30th of June. So this is the same pattern I just showed you on the Bitcoin chart. So we had an up move, then we had a possible flag, but it's a very long one compared to the up move. So maybe it's not the same sort of pattern, but we've had this break higher. So according to what I just said to you, what we should see is the distance of that channel, that distance here, projected higher from this high here, which should take us probably back towards the $2.70 area, $2.80 area in the days and weeks ahead. What we've also seen is a brief fall through the previous support area here. You can see which went back to the early May lows and also the lows seen in early June. Briefly went through there on the 22nd of June before then rallying again. And this was on the heightened Middle East tensions when the US bombarded the Iranian nuclear sites. And that was on a Sunday. But then you can see on the Monday we had a huge up move take us above that previous support area. And then interestingly enough, and this is why I keep these support zones on my chart, can you see here, basically, we retested that support on Friday, the 27th of June. Can you see that support here? That low was made right within this rectangle, this support area. And then from there onwards, we broke through this downward trending channel. So the puzzle pieces are falling together. So if the analysis is correct, and if the upside target is correct, we would expect XRP to rally in the next few days. What we need to make sure, though, is that we stay for the pattern to remain valid above the last important reaction low. And that low was made on the 22nd of June, as I just said here, at just above 191, just below $191. So basically, as long as we stay above there, we believe that is a valid trend line break. What are the upside targets? Well, first of all, we've got Monday's high. That was made at 232 or so. Then the next higher high was the high here. You can see a cluster of previous highs. So what I do there is I look at where are the previous highs and do they go back in time? Yes, they do. So what we can do here is also draw a rectangle on there and basically see whether that is a potential resistance area going back to these levels. So you can see here what I've done. I've connected up the high from the 28th of April with the low here from the 11th of May with these highs. Actually, I could make it slightly higher here. With these highs going back to 26th of May, 27th of May, then the high here, 11th of June, and then the 16th of June high. So you can see you've got 5 or 6 touching points which, lo and behold, acted as resistance on Monday. And if we manage to break through that resistance area and also through the red line here, which is the 200-day simple moving average at $2.36, then the odds are pretty high that we are heading back up again towards the May high, which was made at 265. And as I said earlier on, we could actually then extend higher towards the 280 area, where basically the mid-February highs were made. So that is a potential for this chart. It doesn't mean it's going to happen. And obviously, if you invest in Ripple, you need to know what the overall picture is longer term. And you can see that longer term on the weekly chart, it's looking less bullish than Bitcoin, for example. We had this huge up move here in November 2024 to the high in January of 2025 at 340 basically dollars. Since then, we have had this corrective move. You can see we're holding around previous support, and now we're sort of just trading in a sideways pattern, which we're breaking out of at the moment. So we could be heading back up again, but it's not looking as bullish as the Bitcoin chart, because if you look at Bitcoin, you can see here on the weekly chart that we had made a new high above the high seen in January. And if we have a similar valid pattern out of that flag formation and we break higher to new all-time highs, then we're making new all-time highs, and it's looking more positive than the Ripple chart or the XRP chart is looking here. So, as I always say, this is technical analysis from the basics upwards, and all it is doing is giving you the odds, hopefully, in your favor. You're trying to catch a trend, invest in the direction of the trend, but at the end of the day, it's just chart levels, but they can give you an insight into at what level you might be wrong in your views. For example, if you wanted to invest in Ripple and buy it, if it were to fall through the 22nd of June low, then the odds are pretty high that we failed at this previous resistance area here on Monday, and that we may actually retest the low seen back in April of this year. So technical patterns work most of the time, but sometimes obviously they don't, otherwise everybody would be using them. So just to reiterate, everything we're looking at here is purely educational. I'm not giving any advice whatsoever. And Ripple, as Bitcoin, are basically unregulated products, and you can lose all the money you're investing in these products. So just be aware of that. And now I'm also going to look today at Solana because I've had a question on Solana. We've got a similar chart pattern. As you can see here, obviously, a lot of the tokens and cryptocurrencies are aligned, at least from a trend direction, with the largest of them all, with Bitcoin. And you can see here we have a similar pattern to the Bitcoin pattern on Solana. And you can see here what happened, just as the case with XRP was, is that we broke out of our downward sloping trend channel. Here we did so on Sunday, though, a day earlier than on Ripple. And then we got a confirmation on Monday, and headed high again, and then since then we've come off again. Now, what is interesting here is that we are retesting the previous resistance line, which because of inverse polarity now acted as a support line. And you can see here yesterday we held at that previous downtrend channel line, and today the open was also there. So basically we're holding a previous support. Again, the same analysis is true. We had a nice strong up move from April to the high seen back in May at $187.68. Since then, we've seen potentially what is called an A, B, C zigzag correction, an Elliott wave zigzag correction down. And as long as we stay above the 22nd of June low here at $126.12, this bullish break here out of the downtrend channel should take us higher by the distance of the channel. That channel distance is about, let's say, probably $32, which would mean that we could rally according to the chart target only to back towards sort of $182 or so, basically taking us back to the May high, which was made at $187.68. So that is a possibility. Now, what I would like to see is obviously strength in the trend. So what that means is we need to also take out the last reaction high, which is the high seen on Monday. If we take out that high, then you can also see we're taking out the high from the 16th of June, we're taking out the high from the 25th of April. All of this acts as resistance at the moment, but a rise above $159.88 would most likely take us not just to the red line here, the 200-day simple moving average here at $166.59, but also to the 11th of June high at $168.34. So those are definite upside targets. A break above there would open the way for us to head back up again towards the May highs. So that is a scenario based on this flag pattern breakout. But there might be another case, which could be a bearish case on Solana, because what we're seeing from the bottom of this 22nd of June low is a ABC or potential ABC Elliott wave zigzag correcting to the upside. Now, if that is a correction of this downtrend, then if we were to fall through the low here on the 27th of June, which was made $137.27, then it's more likely that we will go down again towards the June low and continue in our downtrend towards perhaps the April low. So this would be the bearish scenario. But again, if you play it from that side, where's your stop loss? Well, as I just said, if we take out the high seen on Monday, then the odds are pretty high that we are going to go higher. So you could have your stop loss above this Monday 30th of June high, or if you want a wider one, you can have it above the 11th of June high here at $168.34 if you have a bearish view on Solana from a technical perspective. If you have a bullish view and you believe that this is a flag breakout to the upside, then your stop loss, in my opinion, should probably be either here on the 27th of June, $137.27, or more importantly, probably this one here, the 22nd of June at $126.12. So you can see here, whatever scenario you come up with your chart analysis, and sometimes you've got conflicting ones, you know at what point that view is from a technical perspective likely to be incorrect, and therefore you can place your stop losses accordingly. Right, now somebody asked me about NASDAQ. Well, the thing is, with this show, what we do is we cover cryptocurrencies, and we just looked at crypto. So I'm not going to answer that one. But watch me on Monday on Technically Speaking, and I'll talk about NASDAQ then. Thanks a lot. See you soon. Bye.
There are certain things in our daily lives that everyone has a view on, like your favorite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hey, welcome back, trader friends. We're on the cusp of the all sessions coming up very soon. But before that, we have poll results.
That's right. So this morning, we are giving you the chance to make some money. That's right. With the Bank of England, we are launching a new consultation on helping them to design the next series of banknotes. That's right. They need you and they need your ideas. Share your views by nominating a theme by the end of this month. And the themes are incredible. We've got culture, sport, art, so some real British history, historical figures. Really, you know, they welcome you to think outside the box. The link is in the chat there, and you can go up there and you can nominate an idea. My one is Sir Roger Bannister breaking the 4-minute mile for the first time in history. What would your ideas be, Ange?
I'm going to go for a controversial one. Guy Fawkes.
Guy Fawkes. There you go. Explosive idea.
Or my favorite character of all time. To me, he epitomizes the joy, the pure joy of Great Britain, people. Basil in Fawlty Towers.
Yeah, that would be a great one.
Basil?
Right, so get your ideas in there. The link is in the chat. We want to hear your ideas as well. But now we move on to some all sessions opening. Let's see what is happening on the New York Stock Exchange as that market opens. Angeline's about to open it for the day.
Whoa, okay.
Ring that bell, Ange. Come on.
Come on. Right, let's go. Woo.
So after a big rotation yesterday, what are we seeing this morning? Tesla, small bounce. My screen, please, guys. Tesla, small bounce, up 90 basis points. Broadcom, 70. That is at the top of your leaderboard. Netflix, also small bounce. We'll go on to Netflix in a minute because there's an idea in the Times newspaper this morning. They're looking at whether you should buy Netflix or not. And who are the biggest losers of the day?
They are United Health Group and also Intel, but really it is a risk on day there because, you know, look at those. There's not much really there. It's really about rotation into some of the better known consumer names that we talked about earlier on with Ronnie. Ronnie, and you were on fire this morning. But also taking a look back at some of the winners there on the board, we're also seeing the likes of some of the EVs come back up. Lucid up 1.5%. And also Moderna. We talked about this with Piers yesterday. Piers, big fan of Moderna, talking about how, you know, actually it's a really easy one to kind of sit on as well because they have basically all the mRNA plays.
Yep.
And currently, there are not enough competitors in that space just yet. They are coming, yes, but not just yet. And they have a lot of big contracts still in place.
Now, if you want to have a look at the ideas from Piers yesterday, they are on our shorts on YouTube. So you can go to YouTube section, look at the shorts, and there is the Apple idea. Apple up 2% yesterday, so he nailed that one. And then also on Intel as well. Now, I did actually get involved in Intel yesterday. So I bought a call structure of the October 23 calls, and I sold the October 38 calls against that and selling the 19 puts. So that all came together to about 20 cents. I'll show you up on screen later at 9:40 when Aaron and I have a chat. But yes, I am in Intel, not buying the stock, but buying the right to own the stock in October above the 23 level.
Did you also clock that we have two people on opposing sides of the Apple trade? Yeah, so just taking a look at the YouTube chat there, we got Bigger Beers and also earlier we had, I think it was Monkey Man saying that they were on opposing sides of the trade. Was it them, Producer Phil? Producer Phil not watching the thread there, but they are Boise says bought Apple 2 days ago. So Boise,
yeah, he nailed it actually. He got in at a really good price.
Oof.
So just before we go on to the next section, how many banknotes are created and destroyed each month in sterling? The answer, only 10% of you got it. 80 billion sterling worth every single month created and destroyed. Big problem with the old fake notes there. So there's more destroyed than there are created.
And when you were there, did they talk about the coins as well? So our pound coins, the reason for the change in shape?
Well, no, but I did ask. It was an amazing turnout actually. We had the chief cashier there, Victoria, and then Nick as well. Now, Nick started on the graduate scheme in September 2008. Can you imagine? So he was in the grad scheme as people were rushing in and going, so we've just had to save the UK banking system.
Wow.
But yeah, welcome to the Bank of England, and you know, good to have you on board. So I put the question to him: are we going to get rid of 1 and 2 pences? And it was actually, they did a consultation with the public back in 2018, and it was a very negative response. But I don't understand why we've still got 1s and 2s. People are scared that everything would be rounded up, but it's rounded up to 5 pence higher.
Yeah, and it's rounded up anyway, because did you not notice in Milan, every time anything was, priced at 198 euros or 190, they never give you back the change. So,
Oh yeah, of course.
right. I was there trying to utilize all my, ironmongery from previous years, because I don't use cash anymore. Boise also made a good point. When was the last time lots of people used, tons of cash? I mean, unless you're flying through Heathrow.
No, this 1 in 5 is still cash transaction. It's really interesting.
Decreasing though, that trend, around the world.
No, they went through the reasons why it'll never drop down to 0.
Oh, interesting. What did they say?
And there was the feeling of people that they still really like having, whether it's savings at home or whether it's for speculation in their pocket, or certain industries still, bookmaking, for example.
I can tell you that Wardy uses cash for his haircuts.
For haircuts.
Yeah.
There you go.
And he likes paying the cleaner
Yeah.
with cash as well. Do you pay your cleaner with cash?
No, my cleaner went to Harvard. He is a graduate from Harvard. And yeah, so he sends me an invoice every month.
Nice.
Yeah. Right, time for your interview, I think.
Yes, we've got Bill Blaine coming up from Shard Capital and now Windshift Capital. Prior to that, he and Piers used to be in the same room together, on the same floor together. So interesting stuff. He can talk all manner of things, bonds and equities as well. Big on Tesla, Monkey Man. Yeah, Monkey Man wasn't you, it was actually Boise, I remember now. But also, give us any questions you have on EVs, on retail stocks. He also does that. So he is coming up right after this.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, go. Hey guys, where are you going? You're not going to get better than cash returns.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, trader friends, welcome to the show. I am joined by Bill Blaine, principal of Windshift Capital Advisors. Welcome, Bill. How are you?
I am just fine and dandy, and great to see you again, Angeline.
You are fine and dandy, because look at your camera. I mean, they're looking at your skin. You look so bronze and, holiday ready. Thank you so much for coming back from your amazing holiday to be with us and our trader friends. We've been very excited to see you. Where have you been? I've got a picture. Let's put it up.
Right, so my absolute passion is sailing. So I've just been off racing yachts and sailing yachts in Greece with some clients and friends. We went all around the Ionian, visiting lots of islands. Doing, when the wind was blowing, we got some good stuff. That's a picture of,
Nice.
I think that might be Calamos in the background. but don't quote me on that. But this was the kind of weather we had. I think at this point we were motoring, but generally the day involved a bit of sailing and then great meals in the evening. It's one of the best holidays. Unfortunately, it was only a week because I had to get back to markets.
For this show. Thank you for coming
Just
back.
for this show. There's nothing else I'm doing just now.
Well, speaking of that, looking at the sunshine on that picture, we've had a lot of sun here, but I'm loving your quote. For those of you that don't know, Bill has a Blaine's Morning Porridge newsletter to all his clients, and you started off with, it made me giggle, Scotsmen are seldom mistaken for a ray of sunshine. This epitome of the markets?
Yeah, so the thing is, I'm a Scotsman, obviously. I'm
and
a grumpy dour Scotsman.
You perma-bear you ever since I've known
no,
you?
I'm not no, that's very unfair. I am not a perma-bear.
I'm trying to trigger you.
I'm a bond guy. And there are two types of people in the market. There are equity guys who tend to be optimistic and happy to believe whatever the narrative is. And then there are bond guys, and we tend to be pessimists. And when someone tells us a narrative story, we tend to question it. And instead of blithely sucking it all up and believing, we say, well, what about this? What can go wrong? So people mistake our inherent abilities for perma-bearism. But it's not true. I mean, what we do is take a more measured approach to finance, and we tend to question anything that sounds unlikely. And I tell you what, I'm watching the markets just now, and I am seeing so many unlikely things. I summed it up in my morning comment this morning, the morning porridge, as markets are unsurpassed in their ability to believe multiple implausible things before breakfast. Okay, I admit I'm ripping off Lewis Carroll, Alice in Wonderland there, but that's the way the markets look for me.
Yeah.
And what worries me is the way that markets are priced for a kind of perfection.
Yes.
And when that happens, that's when you've got to be increasingly negative.
So do we have a duration here? I'm just popping up the US 500, the S&P 500 here, otherwise known as the US 500 on the IG platform. And as you say, price of perfection. I mean, look at those green candles recently as well. And all this amid a lot of uncertainties out there, right? So we got the trade tariffs. We also got, we had the concerns over bonds recently, the bond vigilantes, which seem to have died down. The fact that the big, beautiful bill, I mean, that's going to add some 3.3 trillion, What is it going to take, Bill, to upset the apple cart?
These are absolutely fantastic questions, because at the moment, the market seems to have taken, the market's negativity has taken a bit of a knock, because 3 months ago when the tariff noise started with, was it April the 2nd, we expected all kinds of immediate knock-on effects on supply chains, massive sudden goods inflation in the US, and literally it just hasn't happened. We have seen things going on in the background. We've seen labor markets get much tighter because of the activities of ICE. We've seen supply chain issues starting to emerge. A lot of it has been internally borne by companies, so it hasn't hit the real economy yet. And so the immediate threat of a recession or even stagflation has kind of fallen back. And that means that people have become complacent again. Now, this chart you're showing just now of what the stock market is doing, is absolutely fascinating, because if you're to take that chart back to a similar period in history, 2008, which you were mentioning earlier, the collapse of Lehman, if you take a look at how much the US stock market has risen, you see, look how flat that, to look at the charts now, you really need a different kind of index. If you look where markets were at the collapse of Lehman, they've expanded, 4 or 5 times the value. But the economy has actually only grown by about 100%. It's effectively doubled. And the value of the stock market has gone up 4 or 5 times. Now,
But this is what
the
we were
stock
talking about,
market-
Bill. You know, the whole, market seem addicted, and politicians to a certain extent now that, nothing can go wrong because then they have the helicopter money, right? We've seen this over and over again.
Well, that was what fueled the enormous rise in the value of all financial assets, including bonds, but mainly stocks. It was cheap money and zero interest rates, where you have the base rate in society, the risk-free rate, as we call it, is set by the government bond yield. And if that is too low, it pushes up the price, diminishing the yield of every other asset. And that's why the stock markets, to my mind, are still overvalued today. And that's why we see such ridiculous valuations. And if interest rates are too low, historically, what we've seen is it fuels all kind of speculation. And I look back and I giggle about the last 15 years, the number of crazy things, if it's non-fungible tokens, meme coins.
And I'm giggling there with you because
Doge
2008,
coins.
where were we? We were on the phone and I was there going, I'm seeing people come out of Lehman right opposite my office with boxes. And lots of those people that we know as well, kind of like talking to us over the phone going, and don't know what is happening, but everyone's taking stuff from the Lehman cafeteria and trying to get stuff out of, even the vending machines, because no one knows if they're ever going to be paid what they're owed. And then, the Northern Rock scenario. Yeah, yet again, myself, David Buick, and all those.
That's when I realized it was looking out the window.
Yeah.
It was looking out the window of the office that we just set up. We were trying to set up a hedge fund at the time. And I'm looking out the office, which just happened to be next to Northern Rock. And I saw the queues and I went, gentlemen, we're going to have to change from being a hedge fund, credit leverage hedge fund, and become brokers, which is what we did.
Wow.
And I remember the day before Lehman's selling them back some of their own debt because it made sense for them to buy their own debt back at pennies on the pound or cents on the dollar because it would increase their capital base. Of course, it was far too late and we were getting clients out. And that was the story of the crisis. But since then, the story has been a tremendous rise in the value of financial assets. And that's another reason, as a bond guy, I look and say to myself, some of this looks unsustainable. And today I'm thinking the same thing, because we don't just have record stock market valuations in the US, but we also have incredibly tight spreads in the bond market. And in the bond market, there is always truth.
Right, we have. I'm going to stop you there because we have a really, really good question from Julian, who's one of our clients and also very loyal Trade Live with IG viewers here. Julian asking you, Bill, will the bond market cause the UK government a problem? This is the UK.
I'm less concerned about the gilts market, that's UK government bonds, than I am about the effect of the big beautiful bill on the US Treasury market, because there are a whole series of things going on in treasuries that could have a more dramatic effect. But for the gilts market, I'm going to go against the grain here. I am not going to call Labour incompetent, which is what most people seem to do. I just think they're not being imaginative enough in the way they could have used the bond market to finance the much-needed reform of the UK economy that's needed. Yes, I know that Liz Truss destroyed the bond market with her unfunded things because she was like a whirlwind. But I think if Labour, which came in, just 363 days ago, if they'd come in with a measured series of packages, this is why we're going to buy more money, the bond market would have accepted it. Today, Labour's in a different place. They do not look as competent as they could have been. I am loving this chart you just put up. One of my favorite website pages, the US debt clock. Do not ever look at that page.
Yes,
if you are trying to have a nice day, do not look at this page, because you know what? These numbers are going to start spinning even faster as a result of the US debt clock. Somewhere on this chart is the amount of money that Doge saved in US spending. And it's tiny. It's insignificant.
Tiny compared to how much is going to be added on, right?
Yeah, and I think that is going to be a real crisis. It's not just that people are going to think, wow, the US deficit is getting out of control. Yeah, we know that. But if the US was competently managed and you had competent politics, we could probably accept that. But what's happening alongside that is we do have de-dollarization gradually going on. And what happens is every time you do a trade, you pay for whatever the commodity is in dollars. That dollar amount goes into your bank and they buy US treasuries with it. But when people start trading in renminbi or other currencies, the dollar's no longer there. So that's less money going into the US Treasury market. And people start doing their own thing. That means there's less foreign demand for US Treasuries. Now, I'm not really concerned about the fact that the UK, believe it or not, is now the biggest single holder of US Treasury bonds. That's because so many of them are held here by funds for various reasons. But when big countries like China and others stop buying treasuries, you got to wonder who is going to fund the US deficit. And that means that rates probably have to start rising. There's been a lot of concern of that, as you said earlier, Angeline, about the bond vigilantes. And I suspect this is not going to go away. The big thing the market is talking about today is Jerome Powell saying yesterday at the Sintra ECB meeting that he expects to be able to cut rates once it's become clear what the tariff taco noise did to the market. But I suspect he's going to be more concerned about who's going to turn up to buy US bonds at the next auction and the one after that and the one after that as inflation starts to rise and puts investors off.
Which leads me to, the key question here that smart investors are asking, when is the penny going to drop? Because we have, so many market watchers and investors and traders, who understand the importance of what the signals are coming from the bond markets. But yet again, we keep seeing markets, especially indices, continue to rise, almost like shrugging off, right? Shrugging off the bond vigilantes, shrugging off geopolitics. We've seen Iran, Israel. Are we in a space where actually we are going to see this sort of slow melt up continue? Because all this taco tariff confusion, what it just means is we end up getting data that shows that inflation, this huge inflation wave that we're looking at, didn't actually become as big a problem as expected. Are we going to see that because we have all the uncertainty, which means that companies are not hiring because, how can any CEO, CFO deal with, tweets that change the markets overnight? And so all this holding back of hiring, plus cost cutting due to uncertainties, plus AI means that corporate profits are actually going to be better, not worse, right? And so all this together, does that mean that's going to support this continued melt up?
Okay, these are all very good points. And I think, we could discuss each one. We probably don't have time. But let me give you a very quick overview of an answer to that. And the first is there's a massive difference between investing and trading. Trading is the art of reading the mood of the market. And at the moment, the mood of the market is very reactive to any positive or negative noise. And at the moment, it's very positive. So the market is going up. And if you're a smart trader, you are following that mood and you're going with the sentiment and you buy and sell on that basis. Now, I do that myself. I have a couple of big shorts in the market just now, but otherwise it's really looking to trade what the market is thinking and its sentiment. That's a massive difference from being an investor. An investor is looking at the long term. It's looking at all these factors that you've just been quoting and say, what is the most likely outcome? What is my knowledge of what markets are done in the past and how they are likely to react? So what ideas am I saying put in front of me that make long-term sense? Now, a great one to talk about there is AI. From a trading perspective, this is going to change the world. This is going to make the world completely different. This is going to generate massive profits. From an investment perspective, it's look for the right name to invest in. Which one at the end of the day is going to be the one that survives, and which are going to be the pets.com of that market. 25 years ago, we had the dot-com crash. And we're likely to see the same thing happen in AI and whatever the next thing in tech is. These things, that's the difference between being a trader and being an investor. And at the moment, it's very easy to be a trader by playing the market sentiment. But at some point, you've got to make the call, when do I get out? I have a whole series of market mantras, which I'll be delighted to send to you guys to post on the website if you want.
Yeah,
but it's things like, you've got to understand, rule one is that the market only has one and one objective only, and that is to inflict the maximum amount of pain on the maximum number of participants. So that's mantra number one. But mantra number two is, market mantra number two is, things are never as bad as you fear, but seldom as good as you expect. And it's the trick is to play right in the middle of both of these.
Yeah, that's true, right? Because you can't ever call the top and you can't really call the bottom. No one's...
It's better to get out and miss the last 5% of a rally than catch the first 20% of a crash.
Yeah. And also, don't forget, on the IG platform, you can have, I always tell everyone this, it's free, it's not, there's no charge. Make sure you have your stops and your take profits, because that's really easy to use. And in times of great volatility, you can also put in a guaranteed stop. Having a look across the board, I'm just looking at some of the big moves as well, checking in on Tesla, because all sessions, it has had a bit of a recovery, not much, so it has been said up 1% there. After, in the previous session, it was down more than 3.5%. What do you think of Tesla, Bill? And triggering you again?
Tesla is my proof that markets are stupid.
This is not based on the cars, right? Tesla's not based on the cars
anymore. Back. I tell you what, take the chart back to the US election. Okay. Let's run from the US election.
Yeah.
I can't see the bar.
You just keep talking. I'll run it back.
Musk is. I've read so much about Musk. There's a great book about him, about hubris. You name it. But Musk just keeps surprising. Let's be blunt. Tesla is finished. They are no longer making the best cars. They are not selling the best cars for multiple reasons. The Chinese have longer ranges. They're faster charging. They've taken the lead in technology. They are not about selling batteries because they buy their batteries from China. They're not about robo-taxis because I think they have 12 of them and one of them's been puked in already in Austin, Texas. Yeah. Waymo have thousands of them. So they don't lead robo-taxis. They aren't going to be the guys that make robots.
Yeah, and that's totally right, because I'm going to show you a quick video. Terence, quickly, can you put up the Xpeng? So I drove the Xpeng last Saturday. No one was hurt or killed in this process. That is me driving with my thumb, and no one is in that car. I am outside, and it parks itself. I can tell you that this is a direct competitor to the Model Y. I've driven all of the Teslas as well. That's my kid saying we're going to die, but no one was hurt, I promise you. But the build quality and also the Xpeng supersedes. I mean, it's better. It's got all the bells and whistles, whereas Tesla wants to charge you, additional $1,000 for any single thing that you want to add on. So you're totally right there, Bill. It's completely different ballgame.
I've got to say, I'll take the car that was parked next to it, the Defender.
The new Defender. But just very quickly, we've got Rich next to me. Bill, meet Rich McDonald. Rich, hi, this is Bill Blaine from Windshift.
How are you, Bill? I never missed the chance of speaking to a fellow Dower Scot.
Yeah, great to meet you.
And you as well. So Bill, I had to come in and get involved because you are definitely speaking my language. I'm glad that you love that website at all with all the flashing numbers. It reminds me when we
just love it.
We used to play the bandit in the pubs as kids with all the flashing lights.
Yeah. Well, no. By the way, I still go up to Scotland a lot. My old university, Harriet Watt, saw fit to make me an honorary professor of economics. And I've got to say, going up and lecturing to the postgraduate course on investment management is the most satisfying thing I do. Gives me the chance to go back to my hometown of Edinburgh and go and see all the other denizens of the Charlotte Square mafia. You know, I think it's the third biggest investment centre in Europe. Great people, great fun to be there. But yeah, I would leave you all with this thought that whatever you think you're seeing in the stock markets, keep a very close eye on the bond markets. But there are things going on that worry me in bond markets. It will not be a massive collapse because countries don't go bust. Yes, I know William Rhodes got that wrong years ago for Citicorp. But the US is not about to default or go bust unless Donald Trump does something particularly stupid, which is not a zero risk. Where I'm more interested is how the bond markets are evolving. And that's why I think I mentioned in my morning porridge comment this morning, I talk about how Meta, the old Facebook, is raising 29 billion from the private capital markets rather than going to the public debt markets. Now, why is that? I think it's because Zuckerberg has realized that finance has changed. It's no longer about investment banks. It's about this coterie of hedge funds and private credit providers who now have so much money that it's easier to activate finance from them than to go to the public markets. Now, jokingly this morning, I've called that group the Dark Enlightenment. And that's because I was reading about how Peter Thiel is backing a new Silicon Valley bank, which is going to call Erebor, which is the name of the mountain from The Hobbit, because everything that Peter Thiel does is Lord of the Rings related. I'm a great Lord of the Rings fan, but you know, when Peter Thiel launches his own bank to finance big tech, I've got to say, let us not be coy about this. Let's call it the Dark Enlightenment of tech billionaires, hedge fund managers, and Peter Thiel going, yes, come to me, my preciouses.
It's very funny, Bill, because I was stuck in New Zealand in a beautiful little town called Queenstown for 2 years over COVID, and it's this kind of the rolling hills. It's very like Scotland. In fact, they've got their own Ben Lomond. And
but New Zealand is Scotland version 2.2.
And they filmed a lot.
It really is. And of course, they landed there and they called most of the stuff Scottish names. But there is one house up on the hill, and it's been only built in the last 10 years, and it sticks out like a sore thumb. And guess who owns it?
Peter Thiel.
It's his secret hideaway, and it looks like a Bond villain house. And I spoke to some of the...
Does it have a big revolving eyeball?
Like the Eye of Sauron.
Exactly. Honestly, it's right out of a Bond movie. And but it's interesting that you're talking about those private markets, because they're becoming more and more important in real estate, in the private equity. Do you think that if liquidity moves away from public markets and from US treasuries, does there have to be an end game where it moves back and it comes into to save government funding?
That's a really interesting long-term question. At the moment, what's happening is so much money is getting pumped into the alternative asset space, whether that's private equity, which is no longer working the way it did because people are struggling to exit from private equity investments. Yeah. The real area of interest to me is private credit. Now, that's what I do for a day job. I write the morning porridge from 6 o'clock in the morning because I always get up early, ever since I was a wee boy doing a paper round in Edinburgh. And then stacking shelves. Yeah. And then I write my morning porridge, and then my day job is in the alternative asset market where I'm raising company financings exactly as you describe, in everything from aviation to real estate. Now, all the money is starting to flow into these private credit funds because retail investors are now finally getting the opportunity to invest in them. That means they control enormous investment power. And it certainly makes sense for people like Mark Zuckerberg to align himself with these firms in order to get access to cheap money. It's exactly the same way that 200 years ago I would have gone to Barclays or NatWest, 100 years ago, I mean, to Barclays, NatWest, had a good relationship with the bank manager to make sure I could always get cash. 20 years, I mean, I've been in the markets for 40 years. I started off at Morgan Stanley, ended up Bear Stearns, HSBC. And in those days, it was all about relationships. Who could we lend money today?
So, Bill,
Today,
based
if you're a smart
on
business,
this, are we going
you
to see
have a relationship
more and more
with
products
these
out
funds.
there that, you know, most retail investors would not be able to get their hands on, but more like, you know, I've been seeing the announcement of GPU bonds, for example, right?
This is what really worries me today, Angeline, is that if you run one of these big funds, you're going to keep the best assets. You're going to cherry pick the best assets to hold yourself. Then you sell the other assets to your institutional buddies. And at the end of the day, because there's a lack of transparency in these markets, you're going to sell the least performing assets to retail, because historically that is what always happens. It's retail investors. So I know you have a large number of retail viewers and subscribers. They have to be very careful about how this is going. If you borrow money in the public debt markets, you have to do all kinds of things and demonstrate all kinds of numbers and publish all your results. You can do the same thing in the private credit markets with none of that pain and anguish. Now, I don't think that the big funds, the Apollos, the BlackRocks who are getting into this, and PIMCOs and all the other Carlyles, you name them, they are actually where the smartest, brightest, and most receptive people in finance are today.
Yeah.
You're not going to find them at Morgan Stanley or Goldman Sachs. That's where the smart people are. They are creating better finance. I don't really believe they're all minions of the Dark Lords, Peter Thiel, sorry, Sauron. But you know, it's just another evolution of the market. And it's certainly one I think you have to keep a very close eye on.
Yeah. Great. Bill, final question, please, if you've got a couple of minutes. What is the trigger, right? We both have the view on the S&P 6,200. We're in complacency, possibly entering into fantasy land if we get up to 6,400. What's the trigger that we have to watch for? Is it the jobs market? Is it 30-year bond yield? What's going to be that Northern Rock Bear Stearns moment? And the when subprime bonds, the first one to go was it AIG? No, what?
No, there've been so many. When I go skiing, I've still got a jacket that says Bernie Madoff Corp on the back of it. I'm keeping it forever.
What's going to be the catalyst?
What's going to be the catalyst for this? I don't think, you know, it's impossible to predict the no-see-em. That's what I call because black swans do actually exist, but it's the black swan event.
In Adelaide.
Something you thought would never happen. Yeah, they've actually got them in a river near us. They as well now. They've migrated and taken over Hamble. But the catalyst, I think, is going to be a succession of things, and it's going to be exactly as you said. It's going to be the payrolls numbers. It's going to be inflation is the one I'm particularly watching.
Right.
I'm looking at the effects of TACO tariffs have been delayed, but they are still going to be significant. It could be a geopolitical event, although I actually feel, and this will surprise anyone who knows me, I'm beginning to see a sort of common sense in much of what Donald Trump is actually doing. He does see the requirement to completely change the US economy. And I don't think we gave him enough credit for that before. Unfortunately, what he wants to change the economy into is not going to work. So I'm going to give you a wild idea for what that no-see-em moment is going to be. And it's going to be around us today. I'm supposed to be in London today. I'm supposed to be doing a series of meetings, but you can see I'm sitting in my home office. And the reason for that is it's too damn hot up in London. It's no fun at all trying to, and when I'm up in London 2 or 3 times a week, I'm jumping in and out of tubes because it's easier than faster than getting a taxi. It's no fun going up and down London in a heat wave, especially when it's full of tourists. I've just come back from Greece, where the temperatures actually were much lower than they were in other parts of Europe. A friend is at Sintra at the moment, and she's telling me it's 48 degrees. I've just been sent a picture from one of my mates in Chamonix, because one of my other passions is skiing, and there's a massive hole has appeared in the glacier above Chamonix. Now, these things are all indicative that temperature is changing. What Trump is doing is he's trying to take the US back to a previous era, and that isn't going to work. I think Biden actually had it right with the massive investment into renewables. Maybe they won't solve the world's problems, but they're a better direction to do. So my moment of catalyzation, as you put it, Angeline, is going to be a whole series of climate events starting to mount and mount and mount alongside all the other economic pieces of data that come in. And they're going to start to put the living fear of God in us that we're heading down the wrong path.
Bill, I completely agree with you, because more than 10 years ago, I was in a room with lots of politicians who will not be named. And one of the key reasons why the UK and the rest of Europe haven't attacked Russia after what it's done to Ukraine is because 50 years or so, even like maybe if things start getting much worse on the climate front, at some point, Russia and Ukraine are going to be, if not already, the main breadbasket of Europe.
Yeah.
Europeans know this. The ECB have meetings about this. They have maps. Everyone knows on our trader friends here, I love a map. And the crux of the matter is Spain, Italy, where Rich has just come back from Milan, so have I. It's not going to be feasible for them to grow the crops that they're used to growing anymore. And so I agree, this is a really big problem. The Americans are not going to feel it because guess what? They're all going from air-conditioned cars to air-conditioned buildings.
And guess why they want Canada?
Yeah.
Yeah.
The breadbasket North America.
Exactly.
Look, these are all things that are going to come up. My big fear is in 20 or 30 years' time, there'll be a statue of Ed Miliband as a visionary.
But the great thing is, Bill, that governments are prepared for this because they've managed to get their budgets back into balance. They've brought their debts down. So just in case there is a rainy day...
we just jumped into a parallel universe there.
They've prepared so well that, you know, they've got the debt right down. So when there are global events like, you know, all these geopolitical...
Send me a quarter ounce of whatever you're smoking.
He's not sharing it. I keep asking.
The boom and bust. Are we in the boom right now? Is the bust
this
next?
Is actually, you're actually talking about a very serious issue here, which is politics. Politics, to my mind, are really important for markets. And at the moment, we have a real crisis in politics because politicians have very, very difficult decisions to make because they're realizing that they're running up on debt barriers and they are seeing their tax bases starting to tumble. They are terrified of fair tax, which would mean absolutely squeezing the rich till the pips squeaked. Now, I think that's going to have to happen. It's fascinating that on the Labour side, you've got guys like Liam Byrne, who I think is a smart, clever economist. He's saying these things that we're going to have to start taxing ridiculous. And the whole market has a smile on its face like yours saying, how dare they even contemplate taking my money away from me to pay these poor people who don't do enough to make themselves wealthier. We need to change. There is a strand in politics of libertarianism, which I think is associated with this dark enlightenment, but also crypto. And you can see it also in populism. Donald Trump is so successful because he has spotted the opportunity for populism in the States. And I think he truly does believe he's doing the right thing for his MAGA supporters. What concerns me is it's been hijacked by this libertarian string, of which J.D. Vance is very much part as well. What's happening in the UK worries me even more. We saw 14 years, let's be brutally honest, and I'm a Tory voter, of 14 years of Tory incompetence, and it was embarrassing and humiliating. And then we're seeing Labour come in and, you know, I said at a conference recently that the best ever Conservative government we've had in the UK was under Tony Blair. I was hoping it was going to be under Keir Starmer. But in fact, what we're seeing is almost like a a different version of the internal dispute that racked the Tories.
Tory party.
But then I sit back and I look and I think, hang on, this is all in the minds of the right-wing press. I mean, I read the Tory graph every single morning to understand what the enemy is thinking. I love reading Alison Pearson because she's just so over the top in her vitriolic, unwarranted hatred of these poor people from Labour who actually care about the environment, poor people, disabled people and all this. How very dare they? I mean, it is absolutely shocking. But the problem is we have such polarised politics that it opens the door to people like Farage. Now, I've met Nigel Farage. He's a charmer. He's a very interesting fellow, but he has zero policies and he's got zero skill sets that he could bring to the table. Yet you have people like Rod Stewart saying, oh, give the guy a chance. What? To make an even worse job with the economy? Please help me. I really do think that this is all coming together at a terrible time because there's a big theory in economics called the Kondratiev wave. And that says that the world changes every 60 years. And every 120 years, 2K waves, you get a change in the global hegemon. That's clearly happening just now. America is no longer going to be the most powerful nation in the world. It might remain very important. I'm sure it will because it's got a great economy. It's got great military, but something's going to replace it.
So
and at that period of uncertain change, we've got terrible politics, and that leads to big questions about democracy. And without democracy, capitalism doesn't work.
So, Bill, what do you say to those who are watching right now, who are, long S&P, long Nasdaq, long Dow Industrials? What would you say to them? What kind of duration are we looking at? You talk about the Kondratiev cycle, but where exactly are we?
Okay, so two things. First of all, subscribe for themorningporridge.com. That'll tell you what you should be thinking about in the market. And the second thing is to remember my second market mantra. Things are never as bad as we fear, but never as good as we hope. There are definitely companies that are coming through just now that are going to be part of our future. There are more companies that will probably not be part of our future. If you take a look at companies over a 100-year time frame, very few of them last as long in the top 10 as Apple has. There are lots of meteors that shoot through and look massively important, but disappear from our screens forever very quickly. You really need to consider what the future is going to be like. And the world is going to change again and again and again. If it's not AI, it's going to be quantum computing, or it's going to be nuclear fusion. Just keep your eyes open, listen and watch. And read the Morning Porridge.
Many of our viewers also asking whether Bill's part of our Discord group.
We in our dreams. Bill,
what's your Discord group?
Oh, well, that's so there's a fantastic group of our viewers who have constructed a Discord group that chat about macroeconomics, all these ideas, all these themes. So you would be an honorary member by every chance.
I'll be delighted.
We'll get Maturin to send you an invite. Maturin, okay.
So last question.
Do tell people to just have a look at the Morning Porridge website. You get it free 3 times a month, or you can subscribe for it. I'm always happy to answer any questions that people send.
Great. We've popped that into the chat as well, so everybody will be clicking on that as we speak. Final question, Bill. Cable. Is it going to be above 142 or below 130 first?
Put it on the chart.
Great question. That is a fantastic question. You know what? It looks toppy, but I think we may see it go further, simply because I do not think that the full implications of TACO tariffs are yet apparent in the US, and I think it suits the Americans to let this continue. It's a tough one. I don't tend to follow currencies as much as I can, as I should, and the reason for that is I just keep cash everywhere.
Fantastic. Absolutely wonderful to have you on, Bill.
right? We will
Yeah,
have
this,
you
know
back.
what? This was great fun.
Oh, good.
Loved meeting you. I've known this one for years, but it's great fun to have a
Do you know
proper
what, Bill?
chat.
One of the things that I really, I don't know if I can say this, but we spoke when the whole Lehman thing was happening. I was watching from across, and I think it was you when I said, do you think I should walk across and the sign is still there? And of course, someone else has got the sign now, and apparently it's been making the rounds on eBay, and it's just the sign outside. And it's last time I checked, something like 20K, exchange hands for 20K. Unbelievable.
You know what? I've been in this market for 40 years. It's given me enormous fun. I have up on my shelf here all my Bear Stearns memorabilia. I've got my Ace Greenberg book. I've got the history of how Lehman's merged with another firm. The history of finance is great fun.
Yeah.
But God, what a mess we made of the world as a result.
So we'll get you back on. We've got another guest waiting in the wing. So
Fantastic.
I actually have to go and do some work now. There's a guy who's been waiting. I didn't realise the time.
Good stuff. We'll thank you very much, and we'll be back in 2 minutes with Aaron Bright. Thank you. See you then.
Thank you.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
That was fantastic, wasn't it? Yes, we absolutely will invite Bill back again. He just said that he was meant to be on a call at 9:30 and he didn't realise how overrun we had gone. But yeah, I had to jump in because I just what a wealth of knowledge.
Indeed, yeah, good discussion.
Yeah, it was really good. So let's carry that on then, Aaron. What are you thinking at the moment? What's really taken us to the 6,200 level, and can we stay there?
Well, it's a little bit of euphoria, I would say. I mean, we've seen markets sort of shrug off the initial tariff woes. I think there's a little bit more clarity on where tariffs are. Instead of China having sort of 160, 70, whatever % tariffs, I mean, the number didn't even matter. Once it got past 100%, it's like, what's an extra 30% at this point? We're still getting extortionate costs. But that figure's now sort of pegged at around 30%. Not 100% clear on where that's going to be, but we've got, some planning is in the pipeline in the sense that we can plan for, or the American companies can plan for sort of 90 days and they know where they are at tariffs. So that's, I'd say, the primary reason.
That's a week today, right?
Exactly. So, that's markets are probably going to sort of look at that and see, well, we saw that Trump was quite quick to reverse things the first time if markets throw a bit of a tantrum, particularly the bond market, equity markets, and businesses come out and sort of ring him up and say, what are you doing? So we know that the policy can be quite erratic. So that's why we, even if there is this sort of re-emergence of tariffs, we might see a bit of a whipsaw in markets and a sell-off, and then potentially another rally if it gets sorted again.
Can there be another rally from here? So Iran, Israel, is that done?
Well, I think that there can be another rally. I don't know. I don't think it would be entirely rational for there to be one. But we're not at 2002 levels in terms of price to earnings. We're still, if you judge it by that, we're trading at lower multiples, even though it's still well above its sort of 10, 20 year average in terms of price to earnings. And on your point to Iran, Israel, I don't think it is done. I mean, we've got varied information about whether the enrichment plants in Isfahan have been destroyed, which was the big one, which was 90 meters underground.
Right.
We've got some reports saying it's been destroyed. Trump saying, of course, it's been destroyed.
Of course.
No one's on the ground. Iran are not complying with the International Atomic Agency. They're withdrawing from it. They're not allowing officials in the country. To me, that says that they're still trying to enrich above 60% levels of uranium. I wouldn't be surprised if they were preempting a strike and were beginning to remove potentially enriched uranium. But obviously, it still could have been destroyed. So the lack of clarity suggests that it's something to keep your eye on. And
it's like when they thought they got Bin Laden back in 2003, 2004.
Yeah, exactly.
And there was that one chance to do it, and they botched it, and therefore it was 8 years later.
I mean, it will be absolutely terrible for Trump to say, well, we've deployed our stealth bomber bunker busters and missed the target.
And it's failed. You can't say that.
No. So, I think initially the reaction was it's all been destroyed, but then more information is coming out to suggest that maybe only the top layer has been destroyed, the centrifuges could still be working, or the enriched uranium has been removed.
Yeah.
And, the reports were suggesting that they're quite near to sort of weapons grade level. And if they attach that on a warhead, then we're in a spot of bother, to say the least.
But the varied reports, I mean, weeks away, very suspicious of that being true. But do you think it's at least delayed this? This has put this, because if we're talking about the markets in the next 2 months, it seems to have disappeared. It seems to, we've got rate cuts, Jerome Powell, we've got tariffs with Bess and Trump, and then we've got Iran, Israel. It seems like that's a sideshow now for the foreseeable.
Well, potentially, but you saw how quickly the sort of skirmishes throughout Iran happened. I mean, there was a little bit of predicted activity, drills and stuff in Israel.
Has the ceasefire been held to?
At the moment, yes, but
right.
There's been, I think, some form of activity still going on in the region, particularly with Gaza and Yemen. Can escalate quickly, whether it's a preemptive strike, whether there's, Iran decide to attack Israel with ballistic missiles. Things can happen very quickly in the region, and that's sort of what, follow the geopolitics very closely, and particularly in the Middle East, things can happen extremely quickly and move very fast. So,
so you're not short oil here then?
Well, not at the minute, no. I mean, it's we hold it in our portfolios as a bit of a diversifier, just a diversified commodity swap, quite useful to have when inflation can linger around. But there was sort of preliminary discussions about the Straits of Hormuz closing. Didn't come to fruition, but Iran's have got a decent sized navy, and if they want to blockade it and only let Chinese ships through, they can do that fairly simply. It will come with severe consequences, but they can still decide to do it if that's the route they want to go down and things begin to tick over again.
Now, so on the spectrum of things, right, we're at all-time highs. You're seeing, some would say excessive risk-taking, yet again. If you were to put your money into the varied options that you have in the smart portfolios, where would you be sitting now?
So I mean, it's probably better to be sort of neutral to equities. Maybe, you know, I wouldn't say it's an environment to be massively overweight US equities from sort of a tactical point of view. The levels to buy them aren't particularly attractive, nor is the macro backdrop. So you've got two factors which are suggesting you to not purchase them. The areas which do look better are, I'd say, continental Europe. You've obviously got a huge infrastructure and defence spending. I think it was around €1 trillion. So really crazy amounts of money. So that's 20% of German GDP expected over the lifetime of the bill. So massive amount of stimulus and trading at 40% discount relative to US equities. Emerging market as well, although that's a region where I would say really important to be quite selective, because when people talk about emerging markets, you've got the likes of China, South Korea, Colombia, Brazil, all these sort of countries, and they all have their unique challenges, benefits, valuations. So an area to look at with a magnifying glass. But sort of from a macro point of view, these countries on aggregate handled the COVID crisis well, didn't plough sort of stimulus and you know, loosen monetary policy to an extent where inflation sort of ravished their economies. Were quite prudent, were able to cut rates much quicker than developed market economies. Had to roll that back a little bit as we've seen, you know, the US stop cutting rates, but you know, a lot more. So
you would stay in equities, you would just move geographies.
Well, we look. I mean, we have to have positions across all asset classes. So,
but if you didn't, you know, would you be looking to take money out of equities and move it? You know, where would you move it? Or is cash even an option here, or? Yeah,
cash is an option. I mean, you're getting sort of still around 4% in cash. We do it through a sort of a short-dated bond fund, which I mean, certificates of deposit and those sort of things. So pretty super liquid, short-term AAA debt. You know, in the fixed income space, you've got quite good opportunities. I think you look at particularly the UK gilt market, really good all-in yield, but the long end
even with the Labour problems from yesterday.
Yeah, I mean, from a valuation point of view, it's good, right? But then you look at it and you think, well, there's still interest rate and inflation risks, so that's why you have to position yourself on the yield curve in a sensible manner. So you don't. I mean, it's probably not sensible to be buying 30 plus, 20 plus year gilts and going, you know, ultra long.
3 month.
Yeah, potentially. I mean, we're sort of looking at that sort of 5 to 10 year range, so in the belly where you get a little bit of duration if rates do come down, but you also got good all-in real yield. You're looking at a real yield of sort of 1.52%, which is really rare actually, given that we've had, you know, basically 0 to 1% yields and, you know, inflation above that over the sort of past decade. And then even when we had yields at sort of 4 or 5%, you know, past 3 years, you got inflation at 9%. So the real yield is massively negative. What about gold as we see Trump blowing up the debt? Yeah, really, really strong tailwinds for gold, I think, still, even though we're at all-time highs. The big issue I have with gold is, as much as I like it as you know, asset and jewelry and whatnot, there isn't a way to sort of know the valuation of it. You can't say, well, it's valued. Well, it's just the inverse of the dollar, isn't it? And the dollar is collapsing. But there's no underlying cash flows, so you can't look at it from sort of a discounted cash flow point of view, anything like that, or a dividend discount model. You can't say, well, from an intrinsic perspective, we're buying it at an attractive price. You can look at it based on its average price, but then you have to look. No, but you look at it based upon the fact that there is no increase in the total amount, right? That's true, but you know, then it begs the question of, you know, why do you want it to be in fiat or not is the question. Yeah, exactly. But then it's the question of, why does gold have this value? What does it do? So that I mean. If you go over to the Bank of England, you see 400,000 bars sitting in their vault, and the incredible certification and the lengths they go to make sure that you get back your own gold that you put in there in the 1850s. No, I don't doubt that, Rich. And I don't think we have to question that. What we have to question is whether we want to be in a dollar or a euro or a pound or gold. Well, look, with gold, I mean, there isn't. I mean, it's got a historic value, and people always talk about the story of the Romans and the amount that you could buy with an ounce of gold. Now you can. It's what, $3,500, give or take. You can buy yourself a really nice outfit, you know, really, really top outfit. You could do that the same in Roman days. So it's a good inflation hedge, but it's not. As I said, there's no underlying cash flows for it. So that's the big issue, and that's why portfolio managers are not going to be allocating it at sort of 10, 20, 30% in their portfolios. It's more of a hedge.
Well, it could be 10.
I mean, yeah, probably at most. I mean, we would probably not go above 5, I would say.
So complacency coming into markets all-time highs. Would you rather be in S&P or a gold then? Because if both are at all-time highs...
It depends on your time horizon. I mean, I know that obviously the return potential, even though if you look at it from sort of a perspective where US equities are trading at quite a high price relative to how they've traded, the valuations are high. The actual expected return is still, over a long term, still expected to be strong. We're still expecting some form of US exceptionalism, strong GDP growth, really, the best, most liquid companies in the US over sort of a 10-year period.
So why is the dollar collapsing then?
Well, the dollar's collapsing because of situation with, I think, the fiscal side. I mean, there's a lack of confidence with probably Trump's policies, I'd say.
That feeds through to the economy at some point, doesn't it?
Yeah, I mean, potentially. If I mean, that's the whole argument with the tariffs thing. That's why you saw the Liberation Day sell-off. You've got to pay 150% more for your goods that you import from China. You're then passing that on.
Yeah, but what people are voting with their dollars, saying we do not trust this government, we do not trust the ability for them to run a stable economy, therefore we'd rather be in other currencies or gold.
Well, you've also got the argument as well, Rich, that the dollar was exceptionally strong coming into the year. So you're also looking at the fact that it's strong, you've got all these headwinds, that it was, it kind of makes sense that it was selling off. It's not like the dollar was sort of at its average valuation and then it's just massively tanked. It sort of is mean reverting to an extent, I would say. Right.
So you think that continues?
Well, we're certainly, hedging a fair amount of our exposure in our portfolios. Our dollar-denominated exposure is being hedged back to sterling and we've been doing that.
Even at these levels.
Yeah, I mean, it's part of our sort of mandate to do that. But yeah, we are. Yeah, I mean, currency risk is always a huge thing for portfolios, and we've seen quite exceptional movements in the dollar and also obviously sterling the past few years. So. Yeah. Look, as much as as I always say, we like to make massive returns on the upside, downside protection is so important as a portfolio manager or a strategist or, any sort of role where you're looking at making investment decisions.
Yeah. I mean, this is when you're seeing crazy things like Vodafone's outperformed the S&P by 25% this year.
Crazy stuff. Miracles do happen for you. Yes.
Right, good stuff. Well, that is us. 10:07. My goodness me, we're going to talk all day. Thank you so much for joining us today. That was a wonderful show, especially the questions around when we're at all-time highs. What should you be doing with your money? But we know here that Aaron likes cash. What would you put on a banknote if you could create your own banknote, Aaron?
What would I put on it?
So the Bank of England has given you the chance to you can put your face on it if you like.
I don't have that big an ego, Rich.
Anything in British history or around the UK that you could put on a banknote? Bank of England's given you the chance.
Well, I mean, I'm going to actually have to revert to an old banknote here because this is my economics teacher. First lesson of economics I ever had. My form tutor actually was my economics teacher in sixth form. And she asked the class, does anyone have a £20 note? And I actually happened to have one on me, took it out, and it was the Division of Labour, Adam Smith's Division of Labour in manufacturing. So I've always liked that. That was on the old paper £20 note. So yeah, I'd bring back that old £20 note because it's, whenever I used to look at it, I'd think of Economics 101 and sort of how I got into the industry.
Great show. On that, if you scroll back in the chat, you'll get the chance to put in your idea directly to the Bank of England and have a chance to get your idea on the next set of billions of pounds of banknotes. We'll be back tomorrow. Looking forward to seeing you then. Thank you.